Let's trade some oil now on those words. Alan Nuckman, Chief Market Strategist at bullseyeoption.com, looking at Marathon, which is not quite as juicy as Oxy this morning, but a 7% rally is nothing to bat an eye at. So, Alan, more to come. You want to chase the oil trade higher?
Well, it all does come back to commodities, like we've said over and over. Oil had a breakdown, obviously, after that blow-off top and that kind of capitulation. Came back to its base of $90 a barrel. That's a significant support level. That's where that move started. And looking at this trade, looked a lot better on Friday's close than it looks today because we've already moved higher. But in the big picture, Marathon's traded between 20 and 25. Breakout above this 25 level here targets 30. So there's still a lot more upside. And the PE ratio on all of these oil stocks is still significantly lower than the rest of the market. The PE on the stock is 14.
Wow. Okay, so your point is that it's still cheaper than the market.
Yes. So I'm looking to play this with in-the-money option as my stock substitution strategy. But I also want to talk about the big picture for a second. Last week was so significant in the way that we built on that bottom base in the S&P, had a breakout of that wedge formation where we had higher lows and lower highs, lower highs and higher lows. And so that targets a move here up to the 45.50 level, and that would be above the halfway point of this drop from the top. And I'm going to say this, every time that's happened in history, when we've gotten back half of the losses after a big sell-off, the market's made new all-time highs. So there's a lot of positives here, and let's see if the market can build on last week. But we cannot ignore last week was so significant technically to shift the sands, as Michael says, in the market.
Okay. So it sounds like, Alan, you're willing to embrace your new leaders in energy and commodity inflation-centric plays.
Yes, I am. So, we saw a little bit of relief rally in the market last week when they started to raise rates. We know that that's going to continue to happen for the year, but, it kind of tops out at 2% for short-term rates at the end of the year. To get back to this MRO play, this option's trading for about $5.75. It's $4.50, almost $5 in the money. So it's got 4 months of time. It's the July 20 call. And again, if it gets to that 30 level as the upside target, this option nearly doubles. So again, it's about risk reward. This is more of a leader. Well, it was 10% off its top on Friday when I came up with this trade. It's still 700% off its lows, off the 2020 lows. So, the oil stocks have a lot of upside. If you look at them in comparison to the rest of the markets over the period of the last 3 years, if you look at the oil group itself, it's really, really underperformed the market. So it's got some catch up to do. And it's about capitalism. These guys, are getting great prices, but they chose not to invest all their money into CapEx and into drilling, but they're still doing very, very, very well.
Yeah, okay. And the move off the lows, a percent that has a near zero value in the denominator, so you're going to get some pretty big percentage moves in these energy companies. Marathon traded $3. It was at $3, Marathon. That's crazy. Okay.
All right.
Buying the dip and following the rip here. What was a dip, now a pretty epic breakout. Marathon just moving above its 5-year highs in the latest move.
Well, we talked about just a couple weeks ago, we did trade in Schlumberger. Schlumberger was lagging.
I remember. Yep.
Behind Occidental and lagging behind Halliburton, as I put them in that same group. And that performed very well. And again, my strategy of selling strength, when it had that big pop, we sold half our position. So you've got to use money management. You've got to use these pullbacks as opportunities to get in, and you want to use these blow-ups as opportunities to exit. Like you said, sell the rips. So it's about money management, and I don't think the oil equation is going to change anytime soon. But like I said, these companies are making ridiculous money in this situation.
Okay. I was feeling bold last week, thinking about maybe trying to short one of these big oil moves. I'm glad I chickened out because this is not a trend to be toyed with right now. It seems like that, you're better off siding with Buffett in the energy patch right now, not getting too fancy. Thanks, Alan. Appreciate the trade.
Yeah.
All right, Mr. Nuckman's Chief Market Strategist at bullseyeoption.com.